Hello and welcome to a fresh new edition of Taking Stock. This is the show where we take a look at what the week gone by has been like and what a week it actually has been. A complete roller coaster from extreme bearishness and pessimism to closing the week finally in a pretty optimistic and a happy ending kind of a way. But more importantly, we'll also look ahead because we are poised at a very interesting junction. Will the market continue its rebound? I mean, if it does, there is a long distance to go, or will bears come back and make an appearance once again? I'm Prashant Nair. With me is my colleague Surabhi Upadhyay. Hi, Surabhi.
Hi, Prashant. I think that graph really tells the story. That's the bar. So look at this. I mean, 100 points up on Monday, 175 down on Tuesday, 461 points. That monster rally on Wednesday. And then thanks to the Dow's tumble overnight, we had a huge cut coming in on Thursday. And finally, once again, we've had a big rally on Friday. That's what we're talking about. If you just switch that with the nifty week-to-date graph, then the numbers will become really, really clear. I mean, the kind of sharp cuts that we've had and equally swift recoveries, particularly on Friday. That's what I'm talking about. This is the roller coaster ride that symbolizes this week. Well, it's not just equities. Take a look at what's happened with currencies and commodities as well. On the rupee, we started the week at 74 to the dollar. Over the next 2 days, the rupee depreciated further and further. In fact, at one point, it was almost touching 75. But today, when we saw trade on Friday, it once again started to move higher. There were significant gains to be seen on Friday. In fact, the rupee has been trending largely positive throughout the session. Now let's come to crude oil prices. Again, wild swings over here. The week began with $83 on Brent. Then it moved to about 85, and that's when the Eden market was moving down quite rapidly as well. But again, towards the end of the week, we saw Brent pulling back. That was a big positive cue. And on Friday, we were actually down to a level of $80 a barrel, nearly 80 on Brent. So it's been about currencies. It's been about commodities. It's been all about the mother market. The rise in U.S. 10-year bond yields, that has spooked sentiment. But aside of that, Prashant will talk about that in more detail. Just very quickly, 1-2 other important points to keep in mind. Right now, at least the NBFC issue is on the back burner because what we also saw in the week was SBI coming out and saying that we will buy assets worth at least 45,000 crore rupees. And that, for the time being, has put a lid on the NBFC problem. In fact, NBFC stocks managed quite a bit of a rally as well. Not just that, the other silver lining has been the mutual fund inflow data that we got. And at least for September, things aren't as bad as anticipated. We did see, over 10,000 crores come in equity funds, and that is something that the market can take heart from as well. Having said that, I think, Prashant, it's all about what is happening in the US and these wild swings that we see.
So there are two parts to it, Surabhi. So let's break it down. One is what is happening, and second is what is happening in the US. Does it really make a big difference to our lives here, which is India? So first, what is happening? The US market now is down 5% from early October levels. And this correction has happened, this 5% correction has happened without any clear reason. I mean, there is no smoking gun, so as to speak. There is no hidden reason or a fear that somebody is sold or, China is selling treasuries. I mean, there was the rumor doing the rounds, but nothing of that sort. I mean, so this has been essentially a pullback without a clear reason. That's point number one. They could be, before that, by the way, the sell-off did not start with the S&P 500 or the Dow. It started with the Russell 2000. Which is basically, an aggregate of pretty much all of the smaller companies in the US, right? The reason I'm highlighting that is because if you think about if you hear reasons like it's because of China or trade war and stuff like that, it would first show up in the Dow or the S&P 500. Those two indices are much more globally exposed. That was not the case. This began with the Russell and it kind of spread through into tech stocks and other things as well. So it seems like it's much more focused. The reasons were much more US focused rather than international, feeding off of international cues, etc. The reason there could be many reasons. There could be there is midterms approaching. Markets have previously sold off into midterms only to rally post those elections in the US. It could be oil. It could be rising yields. But it seems like there is not one discernible, clear kind of reason for the sell-off. Now we come to the question whether a weak S&P 500, I mean essentially a weak US market, necessarily means a weak emerging market pack. What could a weak S&P really mean? It could mean broadly deflationary kind of trends. It could mean lower rates, lower oil, and maybe, just maybe if you're lucky, no rally as far as the dollar index is concerned. You look at those three things and it doesn't seem like a pretty like a bad combination to have day on day as you look at what emerging markets like India, etc. may do. So the answer to that question is, well, no. A weak S&P doesn't necessarily mean weak emerging markets. If you satisfy those conditions, that is. And I mean, if you look at Friday's session, we did satisfy all those three conditions. The last thing I want to leave you with it is that this. The question is, have equities put in a bottom in place, and not just for Indian markets or US, but essentially a couple of big markets around the world. And the reason I'm getting to that is, if you look at S&P 500, look at NASDAQ, Hang Seng, Kospi, all of these markets, they've all touched some pivotal support levels. It could be the 55-week moving average. It could be the 200-day moving average. They've all touched those levels and have kind of sort of bounced off from there, almost in a synchronous kind of a way. And that is the reason why it's just possible that, I mean, going from here, we get little of that turbulence, extreme volatility that we've seen, extreme sell-offs that we've seen, and we have some calm over the next many weeks. So I just want to leave you with that thought. But I think we have our guests ready.
Yes, absolutely. So we have our experts lined up to take you through what's been quite a dramatic week. We have Mihir Vora, Chief Investment Officer at Max Life Insurance, with us on this leg of the show. Mihir, thank you very much for joining in. What a week it has been. But I think the question that's emerging by Friday is that, is the worst of this carnage over, this volatility? What's your sense?
One would surely hope so. I hope you're right, because it's been a gut-wrenching week, to say the least. And obviously, as you rightly mentioned, it's been a combination of global and local factors. And thankfully, in the last couple of days, oil has come down quite sharply, good for India. And the fact that mutual funds still continue to see positive inflows means that there is some support to the market on the downside. So hopefully we should stabilize at these levels and see how it goes forward.
Right. Mir, so those are a lot of balls in the air. But if I were to put you on a spot and ask you, what is your experience in the market tell you? Have we for now put a bottom in place?
So you'll probably see the uptake being led by the quality names, the larger cap names, because we are seeing still a lot of volatility in the mid cap names. The other segment that needs to stabilize for the markets to really get confidence is the financials space, especially the NBFC space, which has seen the maximum amount of panic in the last 15 days or so. So once that segment stabilizes, I think the markets will be on a much sounder footing. So in terms of the policy response or the institutional response, I think a lot more needs to be done to assuage fears on the NBFC front, ensure that liquidity is flowing to that segment, because that's what the lingering doubts are at this point in time. Once we get that passed, I think the markets will be on a much sounder footing. Coming to Diwali, we are seeing a busy season ahead. Hopefully consumption is still continuing. So that's what is something that the markets are really looking forward to move forward.
Mihir, is the NBFC problem over, you think? And the moves that we saw this week with banks like SBI saying we'll come out and buy loans directly, has that firmly taken care of that particular bogey?
It's certainly a big relief, because the problem is not on the asset side, as we all know. The problem or the perceived problems are on the liquidity side, and if the larger NBFCs are managed to generate liquidity through any source, including selling of their asset books, good quality loans, etc., I think the worst should be past us.
Okay. There are elections, right? December 11th is an important date. There is a view in the market that if the BJP sort of loses Rajasthan, wins Chhattisgarh and Madhya Pradesh, I mean, that maybe is in the price, but who knows? It could be worse for them. One doesn't really know. Does that make a significant difference to what you should be doing in terms of, where aggregate markets can be? I mean, if they lose all three, I would say you'd agree with most people that the market is going to sink. And then you may get these levels or levels, below where we are right now, but it's unknowable at this stage. What are your thoughts, Mir?
So we've seen many a times there is divergence between the state elections and the central elections. Voters do tend to vote differently in both these cases. So in my view, the bigger game or the bigger issue is the May elections, and that frankly to a great extent depend on how the opposition aligns itself. Is it a tight alignment or a loose alignment, etc. So there are lots of moving parts in that equation. So from an investor point of view, I would place a lot less emphasis on the state elections, whichever way they go.
Right. Okay. No, I mean, I'm just asking that because you know, people who want to invest, should they wait till December? Should they or do it right away? Because, you know, for example, you want to put money in a mid-cap fund or a small-cap fund. I mean, stocks are down quite a bit. And you build wealth when you invest in steeply beaten down prices over the years. Is this the time, or I mean, a month and a half can make all the difference?
No, not really. I mean, given the carnage that's already happened in the mid and small cap space, if one finds a convincing idea with a long-term future available at attractive valuations, I would say you start at least nibbling into the space, because as I repeat myself, to me the state elections are a much smaller event than the central elections. So to that extent, even if there is volatility around the state elections in December, before or after the results of the states come in, I think it should be fine. Probably it'll last a week or so, but even after the state elections, the markets will still start looking at the May outcomes. So I think, to me, May is the much bigger event. I would say a 25% weightage to the state elections and a 75% weightage to the central elections.
Okay, yeah, that's the next thing that we have to start thinking about. But back to this week, Mihir, and one highlight that we saw was this week was all about buying again, coming back in beaten down parts of the market, beaten down stocks. Now, whether it is auto names like Eicher Motors or Maruti, or NBFCs like Bajaj Finance, whereas there is some profit taking that's very clearly set in IT stocks. And that was evident even in the way TCS reacted to its numbers. Your thoughts? Would you still keep a significant proportion of your investments in IT?
Yes, I would, because I don't think the markets have discounted the 73 mark on the rupee so far, while IT stocks have done well in the last 6 months. Given the strength of the US economy, I think it's still an overweight position for us compared to the rest of the market, because, you know, let's face it, there is going to be some credit growth slowdown in the NBFC space, even if we get past the liquidity issues, because I'm sure the lessons have been learned over the last couple of months on asset liability management. So most of the NBFCs, whether they are large or small, will start to behave in a more prudent way. I think the leveraging levels in the system will come down. So you will see some kind of credit growth slowdown in that space. Which probably, of course, may be taken over by the banking sector. But in that space, given that there's been a sentiment shock, you will see behavioral change. So for a few months, I would say that you might see a little bit of a slowdown in the domestic numbers, which will again pick up as we build up to the elections. So to that extent, I think IT has its own space given the strength of the global economy and the way the currency is going.
Okay, let's see how these trends shape up in the coming weeks. Thank you very much, Mihir, for being with us on the show today and giving us your views. Well, there you have it. Let's get you one more voice. We have Ayon Mukhopadhyay, Director of Institutional Equities for UK and Europe at IIFL. He's joining us from London. Ayon, always good talking to you. Good to have you on the show. Now, here's the thing. Yes, Friday was positive. Yes, for the week, India has done better than several other Asian markets. But there's been relentless FII selling. So when you speak to clients out of London, what are they telling you? Is it going to end the selling anytime soon?
As you know, that we are in a scenario where the global bond yields are rising, and this is a phenomena where the cost of capital is changing. The risk premiums are changing drastically for emerging market equities, and it's a simple economics. So in a scenario like this, this selling will definitely continue. And some of the investors that I speak to are mostly emerging market focused investors, and most of the FIIs are like that. So, it's a scenario where, as you see in the last 2 months or so, the selling has been quite relentless. And if you look at most of the emerging markets, so look at China, for example. If you look at the Y-to-date fall in the Chinese market, it's much more accentuated than what has been in India. And also, you should understand that a lot of the selling has happened through ETFs. So we have to also understand some of the passive giants that has been making this flow. So the short answer to you is this flow will not stop right away because their hands are a lot tied. Because what is happening globally, the trade wars are getting messier as we speak. The bond yields are going to rise. So in the short term, this is going to get more, and the selling will not stop. Yes, that's the short answer.
So what about the pecking order now? I mean, as this dust settles and some interest comes back into emerging markets, where does it leave India? Are we making a bottom here where we are?
Well, see, we cannot deny India has some issues here. So there is a bit of a macroeconomic instability going on right now. And that is accentuated obviously by the Brent crude prices and the rupee being at record lows. So there is this twin deficit that we are facing here with the current account deficit, and that's spilling over also on the fiscal side. And but on the pecking order, I think, on the long term, I think people are still pretty much bullish. And, the story remains intact. I think, over just a few sessions of instability here doesn't destabilize the entire scenario here. But I think the things that people will be looking forward is, I think that there had been the selling that we saw in the last week or so maybe was because of the issues in the credit market that spilled over into the equity markets. So the instability that we're seeing in the credit markets has to stabilize a bit, and we see a return to the equity into the equity markets there. Another thing that has been a bit of a dampener was, the move that the government made regarding the oil marketing companies. That was taken at a bit of a regressive step by certain FIIs because it was looked as a bit of a spanner into the reform works that the government was doing. Of course, the government came up with a clarity on that statement, but it did a bit of a damage on that side. And I think the major thing that the people will be looking out would be seeing coming an election year, if there would be any more of this kind of anything like this kind of steps that would be taken that could really damage the macroeconomic instability, more easily on the fiscal side. On the current account side, I think there's not much we can do if the Brent crude keeps on rising. But definitely on the fiscal side, we'll have to see what are the steps the government is doing on that side. But as I said, there are pockets of value that are emerging, and selectively, I think people should be looking at building up positions in stocks that offer this opportunity, like on a long-term sustainable story. If there have been pockets of value emerging, I think people will be building up positions.
So where are these pockets? What are these positions that you're talking about? What's the advice? Where would you put money in India?
Good quality private banks. I would definitely say good quality private banks are something that you could be looking at. Look at buying. A company, IT, for example, is something that you could be looking at buying, because in IT is one sector that is coming in the earnings, that we would be seeing earnings upgrade coming, because I think most of the companies have in the earnings have benchmarked the earnings at 65 to the rupee, and as we've seen that 1 rupee increase to the dollar probably adds close to 2% to their earnings. Some of the costs might be passed through, but even if we take 72, 73 as benchmark, that would see a bit of an earnings upgrade. So IT is one sector that I would say people should be looking at buying. Reliance is a stock that has come off. Reliance continues to be one of our top picks. So that's another. So yeah, so selectively, I think some of these stocks people should be looking at buying.
Okay, Ayan, we'll leave it on that note. Thank you very much for joining in.
You heard the fundamental voices coming in from Mir Vora and Ayan Mukhopadhyay. We have Ashwini Gujral now joining in on the charts. Ashwini, thanks very much. What did you make of this, hugely turbulent week and the way it finally ended on Friday with a very large gain?
See, on the Nifty, we've had almost 5 negative weeks, and this is the first positive week after 5 negative weeks. So that way, it seems that bulls have reassumed control. Now, the ideal sort of upside target is the 200-day moving average. That's closer to 26,145 on Bank Nifty futures, and possibly 10,800 on the Nifty futures. Now, the way today has panned out, it appears that we are not going to rush up there, but what you will have is, one up day, one day, down day, that sort of buying. Because if there was, great FII buying or, great short covering, you would have an out and out positive day and blow off closing, etc. That never really happened. So I am not so sure whether this was backed by big buying. So that way, you still can't chase this market. I think it needs to get back to the 200-day moving average, and then, given global conditions, etc., that is your next decision point. But for whatever it's worth, first positive week, and we should have at least a couple more positive weeks.
Hopefully. We just don't know what happens overnight in the US market these days. Ashwini, how would you approach Monday? Which way to trade now?
See, basically, on the Nifty, if we get back to say 10,380, 400, you want to buy that dip. And on the Bank Nifty, if we get closer to say 25,100, 150 on the Bank Nifty futures, you want to buy those dips, because chasing, as many people may have figured out today, will not really yield you dividends, because there are many moving parts. If everything is moving in our favor, that's good. But if tomorrow or Monday you come in with $83 crude, then there will be give back. So better buy on those pullbacks than trying to chase.
Ashwini, your trades for the week ahead?
See, a lot of stuff has fallen vertically, and a lot of those stocks have gone up 7-8%. So the market is, in terms of stocks, quite overextended. So there, you could have more short covering, upside, etc. So Century Textile is a buy with a stop of 800, target of 835. Reliance Infra is a buy with a stop of 324, target of 342. And Chola Mandalam is a buy with a stop of 1175, target of 1230.
All right, Ashwini, thanks very much. Appreciate you taking us through what you would do as we come back next week. So it'll be two very, very turbulent, volatile weeks, and we go into the next one. I'm looking forward to that one holiday.
That's a good way to be. Well, at least the festive season has had a festive end to equities for this week. So you have a great weekend. What we'll do is take your leave now and see you bright and early on Monday morning.